If we experience, which I believe we will, a reversion to mean, and the market share of precious metals and precious metals related securities goes to 2% of the total asset class, that's a fourfold increase in demand for these assets. If we get that, and I think we will within 5 years, the people with a modicum patience will be very well rewarded.
Welcome back to the channel. In today's video, we have some exciting insights to share about the future of precious metals, particularly gold. Rick Rule, the renowned founder of Sprott Global Resource Investments, has made a compelling prediction. According to him, we might see a remarkable surge in demand for precious metals-related assets, potentially leading to a fourfold increase in their market share. Isn't that fascinating? Rule believes that gold's market share could revert to its 4-decade mean of 2% from the current 0.5%. Let's dive deeper into this prediction and understand what it means for gold investors.
All right, now let's looking at gold in particular. So we did see a run up for gold, and it's now kind of in a bit of a holding pattern. On the one hand, we have U.S. dollar weakness is supporting the gold price, but we also have apparent U.S. economy strength that's potentially holding it back a little bit. Why haven't we seen a bigger and a broader push into gold yet? Does gold have a marketing problem? Are there just not enough people who are invested in gold's success?
I think that's one problem. I think a bigger problem is that investor perception at all levels was formed in 40 very benign years. The period 1982 to 2022, you were probably 40 of the most benign years in economic history. Low interest rates, globalization, inclusion in the workforce. My belief is that ended in 2022. But my belief is that investor perceptions and investor actions were formed in 40 benign years. Gold does well when people are afraid, particularly when they're afraid of the decline of their purchasing power in real terms. They have gone through 40 very, very, very kind years. And I don't believe that people are as afraid as they should be. When I broke into the investing business in the early part of the decade of the 70s, we'd been through 20 benign years. At the beginning of the decade in the 70s, most people couldn't spell gold. By the end of the decade of the 70s, believe me, everybody could spell gold. So my suspicion is that gold will come to be very well known in the next 10 years, which is, given the rest of the economy, unfortunate.
Right. So I guess this is a way of saying that you don't believe that inflation is under control or will be, and you see purchasing power declining over the long term.
Absolutely positive. Several things. Let's do them in order. Quantitative easing. If you and I did it, it would be called counterfeiting. It's producing more specious currency units. I don't know about you, but when I was brought up, producing more of something at zero cost with zero utility was inflationary. It doesn't make the existing stock more valuable. Worse, debt and deficits. I can't speak to Canada, your country, but in my country, we have $32 trillion in on-balance sheet liabilities and $100 trillion net present value of off-balance sheet liabilities. It's $130 trillion at the federal level. We service that debt with a deficit, with a budget that's in deficit to $2 trillion a year. I mean, that makes you even nervous about the debtor, well, the U.S. government. But it gets worse. Negative real interest rates. Nothing could be more concerning about the strength of U.S. dollar-denominated savings products than the government's explicit guarantee that if you loan them money for 10 years, you will end up poorer than when you started. That's the first government guarantee in my life that I have faith that they're going to follow through. The fourth is simple market share. Precious metals and precious metals-related assets. Kitco will love the statistic, by the way. The market share of precious metals and precious metals-related assets is 0.5% in the U.S., which is to say 0.5% of savings and investment products in the United States are in precious metals-oriented assets. The 4-decade mean is 2%. If acceptance of precious metals and precious metals-related assets merely reverts to mean, demand increases fourfold. And that's precisely what I think is going to happen.
So you mentioned that that by the end of the 70s, everyone knew how to spell gold. Everyone became very well acquainted with the value of gold in that type of an environment. What was it like before that? Is this what do you think is the most realistic scenario for gold? Are we really going to get back to that level, a 2% level? What do you think, because it's a very different world, a very different economy, what do you think is the realistic expectation for the share?
I didn't want to throw kerosene on my fire. The statistics didn't exist in 1980 or 1981, but JP Morgan Chase estimates that in 1981, at the top of the cycle for precious metals and precious metals related assets, that over 5% of the savings and investment assets in the United States were denominated in gold. I didn't talk about a reversion to peak. I talked about a reversion to mean. The mean, 4-decade mean, 1982 to 2022 was 2%. And that's what I think is going to happen.
Okay, so 2% is realistic if 5% is a realistic peak.
And within 5 years. Many of your listeners, of course, have trauma holding stock and metal over the long weekend. But people need to understand that these themes, these big, broad themes, take time to play out. If we experience, which I believe we will, a reversion to mean, and the market share of precious metals and precious metals-related securities goes to 2% of the total asset class, that's a 4-fold increase in demand for these assets. If we get that, and I think we will within 5 years, the people with a modicum patience will be very well rewarded.
Currently, gold's market share stands at a mere 0.5%. This means that only a fraction of savings and investment products in the United States are allocated to precious metals-oriented assets. However, Rule's forecast suggests a potential paradigm shift in investor behavior. Imagine a scenario where gold's market share increases 4-fold. This would be a monumental shift, indicating a significant rise in demand for precious metals-related assets. Along with this, add the de-dollarization factors and how the US dollar is set to decline at some point. With such a surge, gold could regain its prominence as a key investment choice. The implications of this prediction are substantial. Investors who position themselves in precious metals now could potentially benefit greatly from this future demand surge. As Rick Rule points out, those with patience may find themselves in a very advantageous position. That's all for today's video on the potential 4-fold increase in demand for precious metals-related assets, according to Rick Rule. If you found this information valuable, be sure to hit the like button and subscribe to our channel for more insightful content on the world of gold and precious metals. Remember, as with any investment, it's important to do your own research and consult with financial professionals before making any decisions. Until next time, stay tuned for more updates on the exciting world of precious metals. Happy investing.